Okay, hey everybody, this is session 9, part A. Session 9, I'm going to concentrate on chapter 6. But I'm going to start off, actually, this part A. I'm going to do something that's not in chapter 6 that I probably should have done earlier but did not. And this is to discuss the notion of marginal costs versus average costs. I'm going to motivate this with an example with taxes, the marginal rate versus the average rate of taxes. Okay, I'm going to start off with the tax example. And this is something every educated person should know. Okay, when you get older, you start doing your taxes. If you have to hire an accountant or someone to do your taxes, you will be talking to that person and they'll send your average rate versus your marginal rate. And this is what, in my view, everyone who has a college degree should understand the difference. Okay, here is how, how it goes. So, okay, in 2020, the year 2020, if you are a single filer, so when you do your taxes, you can do it as a married couple, as a head of a household, or another alternative, just as a single person. So if you're a single person, what happens is you have a call it a personal deduction. Personal deduction, which equals 12,400. Okay. Now, after that, your income is taxed at a 10% rate. So, in particular, here's the example we'll do. Suppose that your income is called the gross income. Suppose that is, let's say, 14,400. The way you will calculate your taxes, as the law says, the first 12,400 you get to deduct. Okay, that's not counted as income. So what happens is you take the 14,400, subtract 12,400, and that leaves a taxable income of $2,000. You only have to pay taxes on that $2,000. The first 12,400 you don't have to pay taxes on. Okay. Now the rules are that after you take your deduction, your personal deduction, the first 0 to $875,000 is taxed at a rate of 10%. Okay, so what that means is, if you were doing your taxes that you made 14,400, you would take 10% of that $2,000. So your taxes equal $200. Okay. Now, let's explain what your let's do what an average rate is. Okay, here's what your average tax rate. That just equals your total taxes, which is $200, divided by your total income, your total gross income, not your total taxable income, your total gross income, which is 14,400. Okay, got my calculator. I get 200 divided by 14,400. I get 1.4%. That equals approximately 0.14. No, 0.014. So that equals 1.4 That's your average tax rate. Okay. What is your marginal tax rate? Your marginal tax rate, that asks if you had earned one more dollar, what percent of that extra dollar would you have had to pay? And the calculations that we would do, I'm going to use green for this. I'm going to say, suppose instead you made $14,401. That would mean your taxable income is $2,001. Okay, you still haven't gotten to the 9,875 mark. So what you would take is 10% of that 2001, and that would equal $200.10. Okay, so what you would pay, so your taxes would go up by 10 cents if you earn that extra dollar. Okay, what percent? So you earn one more dollar, you pay 10 more cents. What's your tax rate on that extra dollar? It's 10%. 10 cents divided by a dollar. We call that the marginal rate. How much? What percent of that extra dollar is taxed? Okay, so your marginal rate equals 10%. But your average tax rate was 1.4%. Maybe actually we could have, I don't think it would change that. I rounded up from 1.399. I think that average tax rate would be the same even if you earned an extra dollar. Regardless, your average tax rate is going to stay about 1.4%. Your marginal tax rate is 10%. Well, regardless, on that 14,400, your marginal tax rate is 1.4%. Your average tax rate is 10%. Okay. Now, meanwhile, what if your income had been less than 12,400? What if your income was 10,000? If you earn an extra dollar, you still haven't gotten your taxable income above zero. Okay, so your marginal rate is still zero. So if your gross income is anything less than 12,400, your marginal rate is zero. Once it gets above 12,400, but it's still below, what is that? Something like 22,200. Add 9,875 to 12,400. It's about 22,000. So as long as your income is in between 12,400 and 22,000, your marginal tax rate is going to be 10%. Now, I'm not doing it here, but if you look this up, turns out if you make more than 22,000, your marginal tax rate goes up a little bit more. I think it's 12%, and so on. There's tables that you can look up on the internet. But the key is, for income below 12,400, your marginal rate 0. Income between 12,400 and 22,000, your marginal rate is 10%. Your average rate is a little more complicated. You got to calculate your total taxes divided by your total income. Okay, that's how you compute average tax rate. Okay, now let's discuss marginal and average costs. Okay, I'm going to go back to chapter 4. And I'm going to look at table 4.4. Okay, that's it. Okay. The key is, first thing we're going to do is we're going to say first units of corn. And this, you can either, let's start at 0. You have 0 bushels, 1 bushel, 2 bushels, 3, or 4. They stop at 3. And then write the total cost. And this equals, if you produce 0 bushels, total cost is 0. If you push 1 bushel, total cost is $1. If you produce 2 bushels, the total cost is $2.10. 3 bushels, total cost is $3.30. Okay. next? Marginal costs. Okay, so you say the first producing zero, it's zero. Okay, if you produce 1 bushel of corn, the marginal cost means the cost of that extra bushel. So it's the cost of going from 0 to 1. Your total costs go from zero to $1. So your marginal cost is just the difference of those two. That equals $1. Okay. So marginal cost is just the difference in the total cost when you go up by 1 unit. Okay. Next, what is the marginal cost of the second unit of corn? Okay. The way we figure that is we just look at total cost of 2 versus total cost of 1, do subtraction, and it's 1/10. So the marginal cost, so another way of saying it, if we're producing 1 bushel of corn and we want to go up to 2, how much will that second bushel of corn cost? And the answer is 2/10 minus $1, 1/10. Okay, how about the marginal cost? If we go from 2 to 3, it's 330 minus 210, that equals 120. Okay, final thing I want to compute is average cost. Okay, if we have 0, the average cost is going to be 0. If we produce 1 unit of corn, the total cost is 1. Okay, the average cost is going to be 1 still. Now, what about the average cost when we produce 2 units of corn? Okay, average cost, here's the formula. Average cost just equals total cost divided by quantity. Okay, so when we go to 2 units of corn, total cost, tell you what, I'll use green. It's 2, total cost is 210. Quantity is 2. So the total cost is going to be 210 divided by 2, and that is 105. Okay. Now, what about when we go from 2 to 3? Average cost is going to be, total cost will now be 330. Well, that is, what is the average cost when we produce 3 units of corn? 330 divided by the quantity, which is 3. 330 by 3 is 110. Okay. So that is how the authors of your textbook get table 4.4 that go through these calculations. I want to do one more example. Okay. Instead, we'll do something completely new. Corn, I'm going to call this, instead of corn, let's call it tomatoes. Okay, so I'm going to do a different example. So I'm going to use red for the different example. And the way it's going to work, we're going to change the production technology. And for now, the last time we didn't have any fixed costs, but this is one thing we often do in economics. We have fixed costs. Suppose that to produce these tomatoes, you have to buy a big bucket. Okay, that's the only fixed cost you need. And the bucket equals $4. Okay. So what we say is, okay, first, the total cost, if we produce 0 bushels of tomatoes, then we still have to pay the fixed costs. So the total costs are going to be $4. Okay, so I guess total cost will still be 0. In terms of the average costs are going to be infinity. I'll discuss that in a second. Let's come back to that. But let's talk about the fixed costs, and then let's not talk about it. Technically, the marginal cost of producing zero would be like going from -1 to 0. So it's really not defined. So I'm not going to put anything there. But I'm going to assume fixed cost is $4. Marginal cost equals 1 throughout. Okay, that no matter how many, before we had our marginal cost increase, went from 0 to 105 to 110. Now I'm just going to keep them at $1. So the marginal cost is going to be $1 every time. So what that means is to produce 1 unit of corn, it's going to cost the $4 to buy the bucket plus the $1, say that's the labor to harvest the tomatoes. So it's going to be a total cost of $5. Okay. So remember we said marginal cost is just the difference in the total cost when you go from the first quantity to the second. Okay. So now let's say what happens when we produce 2 bushels of tomatoes. Okay. That will be fixed cost will be 4 plus 2 bushels. Each bushel, you require $1 unit of labor per bushel, so it's going to be $6. Again, marginal cost is 6 minus 5, so we got 1. Finally, 3, the total cost when you produce 3 bushels of tomatoes is going to be fixed cost 4 plus the labor cost of 3, so we get 7. Okay. What will be the average cost? Okay, so average cost, the formula just equals total cost divided by quantity. Okay, let's see that. So what will happen is, let's start here. For the 3, when we produce 3 units of tomatoes, total cost is 7, quantity is 3, 7 divided by 3, I get $2.33. Okay. What about when we produce 2 bushels of tomatoes, total cost is 6, quantity is 2, average cost is going to be just $3. What about when we produce 1? It's going to be $5 total cost divided by quantity of 1. You get 5. And then for the when 0, you take the total cost, which is 4, divided by the quantity, which is 0. I get infinity. Okay. All right. So that's one more example. Talk about marginal cost versus average costs. You should understand that concept. Good chance I could have a table like this on the exam. I give you the total cost, and then I ask you what's the average, what's the marginal cost when you go from say 1 to 2. And the answer, you'd say 1. You just look at the total cost. Then I might ask, when you produce 2 units, what is the average cost? And you've got to know how to compute, get the total cost, divide by the quantity. Okay. Good chance I could ask something on tax rates. I could say, here's what the federal government says. I would give you the tax rates. The first, you don't have to memorize those numbers, but I would tell you something like, first $12,400, you get a personal deduction. You don't have to pay any taxes on that. Suppose you made a gross income of $14,400. Marginal tax rate is, or I might give you something like that. Anyway, you should be able to say, here's the taxes you'd pay, here's the marginal rate, given the information I've given you, something like that earlier example. Okay, make sure you know that. Something like that could show up on the exam. Okay, that's part A. See you in part B.